Canada's housing bubble has burst. Across the country, for sale signs are multiplying, and once a red-hot real estate market is cooling fast. But what's really happening behind the scenes, banks are quietly pulling out of deals. Loan approvals are being canceled, and appraisals are coming in lower than ever before. This is how housing collapse began, not with a bang, but with a slow, silent unraveling. I'm Chausse, and today we're diving into how banks are pulling back and impacting homeowners, investors, and first-time home buyers across Canada. Whether you're thinking of buying or selling, or just trying to make sense of the headlines, this is the story you need to hear. Let's start with what's changed. For years, Canada housing markets seemed unstoppable. Prices soared, bidding wars were the norm, and buyers stretched themselves thin just to get a foot in the door. But now the tide has turned. Banks once eager to lend are quietly changing course. Behind closed doors, they're canceling loan approvals, rejecting appraisals, and walking away from deals that seemed rock solid just months ago. If you're a homeowner or a buyer, you might not see the full picture yet. The headlines talk about price drops and rising inventory, but the real story is happening in private meetings and phone calls. Banks are reviewing their risks, and they're not liking what they're pulling back, and that's sending shockwaves through the entire market. This isn't the first time we've seen this. If you look back at the past housing crashes, like the 2008 US crisis, it always starts slowly. A few deals fall through, a few buyers get rejected, and then the momentum builds. The question is, how far will it go this time? Let's talk about what's happening on the ground. Banks are now rejecting pre-approved buyers, sometimes just days before closing. They're demanding higher down payments, and in some cases, they're refusing to fund deals altogether. For many Canadians, this is a nightmare scenario. First-time home buyers are being hit the hardest. Many spent months searching for a home, got pre-approved, and now finding themselves back to square one. Variable rate mortgage holders are also feeling the pain. As rates rise and renewals are coming due, monthly payments are jumping, sometimes by hundreds of dollars a month. It's not just buyers. Pre-construction projects in the GTA and surrounding areas are also losing their funding. Developers who counted on easy financings are suddenly scrambling. Some projects are stalled, others are being canceled just outright. The ripple effect are spreading through the construction industry, impacting jobs and the local economy. According to Canada's Mortgage and Housing Corporation, known as CMH, mortgage rejections are at a 6-year high. That's not a statistic. It's thousands of families who thought that they were on their way to home ownership, now left in limbo. Banks are prioritizing safety over volume. They're freezing home equity lines of credit or HELOCs, tightening lending criteria across the board. And if you're relying on a HELOC for renovations or investments, you might find your credit suddenly frozen with little warning. One of the biggest challenges right now is appraisals. When home values drop, appraisals come in lower than expected. That means buyers have to make up the difference in cash, a gap that many simply can't afford. Deals fall apart and the sellers are forced to relist, often at lower prices. Listings are piling up. Financing failures are becoming more common. Sellers are frustrated, buyers are anxious, and real estate agents are working overtime just to keep deals alive. The market is shifting from seller's paradise to buyer's battleground. If this all sounds similar, it should. We saw the same pattern back in 2008 US housing crash. Back then, banks pulled back, credits dried up, and the markets froze. Prices dropped, panic set in, and millions lost their homes. While the Canadian situation is different in many ways, the warning signs are eerily similar. The domino effect is real. When banks stop lending, the markets freeze. When the market freezes, prices drop. When prices drop, panic sets in. It's a cycle that feeds on itself, and it's playing out right now in slow motion. So where does this leave us? The Canadian housing market is in a slow, silent collapse. Regular Canadians, families, investors, first-time home buyers are left holding the bag. The dream of home ownership feels further away than ever. But here are the steps you can take. If you're buying, selling, or renewing your mortgage, now is the time to plan carefully. Talk to a mortgage professional. Review your finances. Don't assume that yesterday's rules still apply. Markets always move in cycles. This downturn won't last forever, but it will be painful for many. The key is to stay informed, stay flexible, and make decisions based on today's reality, not last year's headline. I want to hear from you. What are you seeing in your area? Are you still buying or selling in this market? Share your experiences in the comments below. Your story helps others understand what's really happening on the ground. And don't forget to subscribe for more updates on the Canadian housing market and tips on how to navigate these changes. If you've missed it, check out my last video on foreclosures. Thanks for watching. I'm Justin Chausse. Chausse of the Chausse Mortgage Group. Stay safe, stay informed, and I'll see you in the next video.